Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is May 9th, 2018. Tonight I'm going to take a look at the S&P 500, the ETF being SPY. Got a mixed bag here with the trends. Short and intermediate still pointing to the downside, but the long term is kind of in flux and making some adjustments here. So that's why we have a little asterisk here. So in general, you're still looking at a negativity when it comes to a lot of the trends that we actually use here. The technical rating is also flat, which is really what part of what I'm going to be focusing on today. If we take a look at the deep dive, when we had the S&P 500 not too long ago, it generated a T-rope low. And so the combination between the quiet nature of the market, the non-technical rating for the market, that little sideways deal, and the low that we had here in the T-rope, that's what I'm going to be focused on here. So let's take a look first at the market. Here's S&P 500 daily bar basis, and back on the 3rd of May we had this T-rope. And T-rope is an indicator that tells us that the market is theoretically going to find some support to the market and has the opportunity that there could be reversal. If you don't get the reversal, then what you'd expect is a flip on that. Reversal meaning that the market comes down and you can have the reversal back to the upside. If not, then you're going to get a major move to the downside. So it's kind of a call to action. Watch this market very carefully. And so we've had a number of these in the recent past, and each time the market has found support at it and has reversed to the upside. And so once again, just kind of showing this, the strength to this particular indicator, the T-rope, that just earlier this month, just on the 3rd, we actually were able to generate another one of these signals, and the market has rallied ever since. Now, what's going to take place here is this. I'm going to show this level right through here, this 9, which isn't very strong. It's acting as a target. It's acting as a resistance level to the market. If we're able to break this level, and we're basically at it right now, and if you want, instead of looking at that level, you can look at the highs that were set back here on the on April 18th. If we are able to break these levels, this one's a little bit lower. The actual number is 2701.83. We'll just call it 2702. If we actually have that condition broken and a little bit of follow through to break through this, then we could be approaching this higher level here, which is a little bit of a surprise to me, but we'll call that level, just rounding, 2800. Always having our nice round numbers, something to target and shoot for. Now, this indicator down here, the energy level, the green line is around this lower yellow line, and anytime you get that condition, that means the market is quiet and has got pent-up energy. And that's why I'm really looking at this market both with the T-rope that occurred back on the 3rd and the fact that we've got pent-up energy, that it's not far-fetched that the market could break above these levels. We're basically at them now. When you've had this type of a surge, normally you'd have higher energy levels and you'd think the market might peter out a little bit, but with the low levels that we have down through here, it's got plenty of potential movement that could easily, if allowed, could easily go up and touch this 2800 level. So watch this level very, very carefully and see as whether or not there's an opportunity here to take advantage of the swing to the upside. Now, the other thing I'll point out here is that the S&P 500 right here on our watch list, that what we have here is kind of this is kind of our technical rating. It's kind of low and not really high like you'd have in soy meal, or low in soybean oil, but it's kind of in the middle road, which means that there's again a lot of pent-up energy, that there's indecision in the market, and that indecision, if the bears capitulate, then we're going to obviously see a major pop to the market, and theoretically going up to that 2800 level. What's going on with our systems? Let me just show this to you first. Our systems in the equity markets, they're long the S&P, long the Russell, and long the Dow Jones. I got a nice open position profit of almost 11,500 in the S&P with the systems. The Russell lagging quite a bit, is only up 1,500, and the Dow Jones with 5 systems along the market, we're up at about 8,500. So I just want to show to you exactly what's taking place here with the S&P. I mentioned that T-rope back on the 3rd. Well, the systems went long, at least in one particular position, a 2-hour, 120-minute system went long that day. Then on the 4th, we had 2 more systems, both of which are 90-minute bar triggered. And then just today, well, not today, yesterday, the market generated another long position. So we've got 3 intraday systems that are long and 1 end of day system that are long, and the potential for that resistance level that I was referring to, if we can break above that and still rally, since we've got a lot of pent-up energy and the market is relatively quiet, that there's this great opportunity for the market to actually head higher. That energy level that I was referring to, here's the S&P 500. It's just slightly above, so it's not in black, so it's not active, but it's very close to having been in that lower zone where it's considered to be extremely in an extreme consolidation phase. This despite the fact that the market rallied today and has been rallying for the last few days since May 3rd, that the market is still very, very quiet. And I'm just pointing this out that we're just barely above it, so it's so close to being in an extreme consolidation. This period only lasts about 3.5% of the time. So it doesn't happen that frequently. We're now just beginning to break above that. So I'll flip back to the market here. So the fact is, yes, there appears to be a lot of volatility on a day-to-day basis, but in looking at the energy level, which is a way of looking at the volatility of the market, it's been relatively quiet. And that's why I'm saying that with this pent-up energy, that if we're able to break this level, the level I was referring to of in this case, it's 2702. Just use that as the threshold, and the fact that we're at 2696, we're not that far away from it. That if we're able to continue this thrust and at least as a minimum stay above this yellow line, which is a 50-day. Maybe meander for a little bit, but I do believe that with this pent-up energy that there's an opportunity for it to go up and at least test the next resistance level, which in this case, as mentioned, is at 2800. So watch the systems, especially on the intraday basis, since we've got a number of those systems that are actually active. With this particular entry, you can see that we're looking at 3 intraday systems. If the market should reverse, then those would go first, and then we take a little bit of a bath here on the end of day system. Hopefully some short systems would trigger if it does reverse strong enough. Otherwise, we're building up a nice position, and if we can get that thrust that I've been talking about and going up to the 2800 level, well, then there's a lot of money to be made. I'll just simply show this to you as well, that there's a lot of money being made in all of the markets. Today was actually a really good trading day for the systems. These are all of the systems, and you can see some nice profits across the board, across a lot of the different markets, hogs and sugar and T-notes and heating oil, euro. There's just a lot of money to have been made here. Here's the S&P, that little position we have here in the Russell, and here's the Dow. But just a really nice open position with only 3 of the markets having any type of an open position loss, and the net of those 3, here they are right through here. And then there's a little bit of one here in the soybeans. That they're the 3 positions together make up $567, while the open position on the open positions on the ones that are profitable, you've got a nice open position profit. So point is that there's profit to be made in a lot of different markets. They're underway right now, but I'm focused on the S&P 500 because of that energy and the fact that we're up against a teeny little bit of resistance. If we can break above that, then I'm not saying it's smooth sailing up to that 2800 level, but I'm saying that there's really not a lot preventing it from being able to go that high should the market really start to pick up from that side. So use that as you will. I would definitely encourage you to watch the systems, watch how things are actually reacting, and with any luck, we can report back. Whenever we theoretically should hit 2800 and go from there. So thanks for watching, and we will talk soon.